Hi, everybody. How are you today? Welcome back to Stock Markets with Bruce. This is the channel that tries to explain in plain English what's going on in the markets. Sometimes easily done, sometimes not so easily done. But generally, we work on it. We talk here a lot about how you can make money in a bear market right now. And of course, I've been talking about how you can make money in an all-time high market. I did that last year. I was talking about how you can make money on top of money with the markets at all-time record highs. And now I've been talking to you folks about how you can make money as markets have backed off. And now we've had bear rallies and dips and bear rallies and dips, how to make money and all this. It just keeps coming in. If you're an option writer, if you're a stock option writer, you can keep bringing in money from this market. You can take money in from the options floor where all the gamblers are buying call options. Take their cash, put it in your account for safekeeping, and give them a little bit back. Keep the change, as it were, a big bunch of change. I like it. I'm excited for you folks because you guys are, many of you are, you're making money that you never thought you could make in the markets before. You never thought that you would be allowed to actually offer the shares you have as collateral on an option right. To say to someone, hey, would you like 6 weeks of time to maybe buy my stock off of me at this high price up here? Price that isn't anywhere near the market, 10% higher than the market is right now. Would you like to buy my stock at 10% higher than it's trading at? I'll give you like 6 weeks, 5 weeks, 4 weeks, 8 weeks. You give me money up front, though. You give me a bunch of money up front. I'll give you the option to purchase stock from me at a set price for a certain period of time. But if you don't buy the stock from me between now and the time this contract expires, which is usually a month or two or less, I get to keep all that cash you gave me, and you lose it all. But if the shares go up in the few weeks that you have that you can buy them from me, if the shares go up, you are more than welcome to exercise the option if you like. Or most likely what you will do as an option buyer is you'll probably just sell the option to someone else because it has its market value will rise as the shares rise. And so you'll buy the contract from me for $450 and you'll sell it to somebody else for $5 or $6 or $8 or whatever it goes to. Of course, if I'm the writer of the contract, I write 5 call options on GameStop or Apple or whatever. I can, anytime I want, just buy 5 contracts off the open option market because there are thousands of them out there. I can just buy 5 back anytime I want, and that means that there is no option on my stock anymore. And so I'm not obligated to give it up to anybody. Now, if I write an option this morning and this afternoon, the stock that I wrote the option on slumps a little bit with the market sell-off, I could buy the calls back this afternoon for maybe $1 less than I sold the call for. And since each contract is worth 100, it's a 100-share contract, a $1 move on the contract is $100 profit because I don't have to pay the full price to buy the call back. I only buy the call for what it's worth. And if it's dropped 100 in value, I pay 100 less to get it back. So I make $100 on a contract. Doesn't sound like a lot of money, but if you got 10 of them, you make $1,000. And so you have 1,000 shares of GameStop or whatever, and you write 10 calls, you buy them back $1 lower, you made $1,000 today. Welcome to Monday. Did all your friends make $1,000 today? Were they work? Do you know any cab drivers that made $1,000 today? Do you know any truck drivers? Do you know any software engineers? Do you know any relatives, friends, associates, coworkers that made $1,000 at work today for themselves? Maybe you do. Maybe you hang out with $500,000 a year people, $1 million a year people that make $20,000 a week. Rock and roll. But those of you who hang out with people who don't make $250,000 a year or more, they don't make $1,000 a day. They make less than that. So Maybe you're the one in your office that made the most money today. You got paid to work, plus you made $1,000 writing 10 contracts and buying them back this afternoon. Congratulations. Anyway, we try and do that here. We also have folks here who not only write options in the morning and buy them in the afternoon. We have folks who write options on Mondays, Tuesdays, Wednesdays, whenever, and then they buy them back 3, 4, 5 days later for a lot less than just a $1 gain. And that's where it gets kind of exciting around here, because folks around here who can write 10, 20, 30, 40, 50 contracts on stocks they have or deep in the money calls they have, they can make $5, $10, $15, $20,000 a week in profits. Remember, if you make $20,000 a week from option writing, $4,000 a day on average, that's $1 million a year, because there's 50 weeks in the year, and the markets trade every week of the year. I mean, they don't take 3 weeks off. So in theory, there are probably people here right now who make more than $1 million a year writing stock options. There are some folks here who I think make more than that, but I would say the vast majority of my viewers who are here are probably hauling in about at least 1,000 a month to 10,000 a month easily right now. I'd be pretty confident to guess that much, because to bring in $10,000 a month, you got to make $500 a day, and to make $500 in a day, if you've written 10 calls on one stock and 10 on another and 10 on another, you got 30 calls out there, and you need to make $500. You don't need to make a lot of money per call contract. I mean, heck, if you made a dime, if you made 10 cents on each contract, that's $300 a day. It's a pretty good start. That's $6,000 a month. That's a dime. You make 20 cents, you made $600 today. 30 cents, you made $900 today, and so on. And the leverage is pretty good to the option writer. It's really good for the option writer. What are option writers looking for right now? They're looking for a market that might be topping out at the moment, that might have had a good run lately and might now be a little overpriced. And that is exactly what I think is going on right now. We gained 1,200 points on Thursday last week, 30 points on Friday. We're down about 45 right now on the Dow this morning with an hour to go before we start trading. But I don't see a lot of analysts screaming at their followers, you should buy everything you can get your hands on now. I don't hear that. I'm seeing a lot of cautionary headlines, a lot of cautionary news. And some of the striking info that I've received lately, very telling that we're in for a little bit of rough waters here in the big markets, is that headlines something like, we just got the third quarter financial releases from the public companies. They're almost all done. Another week or two and we got them all out. And then we're going to hear about the fourth quarter projections, and then for the new year, because in December, guess what everyone does in December? Everyone talks about next year. Everyone talks about 2023. And you talk about what a year it was and what a year it's going to be. And the story is that a common one-liner going around, 2023 earnings are going to be disappointing for a lot of companies. They're not going to be anywhere like they were in 2020, 21, 22. The darlings of the COVID virus, those guys, they've all got their butts handed to them. The Pelotons, the Zooms, and when it was like everybody was locked up at the house, you really didn't go out. You didn't want to go out. If you did, you wore a mask, at least if you were sensible. Those days are over. We're now in the Wild West, and it's do whatever you want, go wherever you want, any way you want, and good luck to you. And so the Zoom calls are backed off. The Peloton at-home exercise sessions have fallen off the face of the earth, and so on and so on. 2023 is going to be a so-so year, because we're into a recession globally, higher interest rates, higher inflation. It's going to be bad. Okay. we kind of covered that before. Now, let me tell you something that also came up just a little while ago that I wanted to kind of give you a little hint as to just what to expect going forward. Okay, when you have stock markets going higher for years, which we've witnessed over and over again in general, we've noticed that from say 2010 to 2015 to 2020, even from 2005 to 2010, even after the financial meltdown was out of the way, after that 2009, 8, 9 real estate crash and all that got resolved and settled down, and millions of people lost everything, and then we kind of built it back up again. We have had successive years of record markets. And when you have that, the market value of the market rises. So you take a company like Apple. It was a big deal when Apple hit $1 trillion of market cap value years ago. That was a big deal. And it dominated the press, and CNBC, they probably had on their screen the Apple logo in the bottom corner all the time with that market cap number adjusting all the time at $980 million, 990 million, 998 billion, 998 billion, and then a trillion, and then under, and then over, and then it broke 2 trillion, I don't know, what, 5, 6 years ago, 7 years ago. And then we were pushing for 3 trillion this year, or last year. Then Google did it. Amazon did it. They got over 1 trillion. They went higher. Microsoft went up over 2 trillion. They all went into trillions of dollars of market cap. And the whole market behind it, all the thousands of other stocks, all got lifted in this rising sea of liquidity and values, because the Federal Reserve had a zero interest rate policy. Margin debit accounts, if you had a margin debit balance with your broker, you were paying a low interest rate compared to prior years. Some had really good rates, some so-so. And people were sitting there going, well, I had an account worth $200,000 2 years ago. It's now worth $400,000. And I can borrow up to $200,000, $300,000, $400,000 against it, no problem at all. And so a hot stock would come along, a new IPO would come along, and people felt flush. They felt they got some cash. So I'm going to borrow some money against my account. I'm going to buy this IPO. And they would buy on the first day of listing the IPO. And we all know how this game worked. It went public supposed to go public at 35, went public at 48, and the first trade to the public was 79. And at the end of the day, it was 140. And people were buying from 79 to 140 and speculating like crazy drunken sailors. And they were using borrowed money in many cases, money that was lent to them by brokers who had accounts that were worth a lot more money based on the fact that, starting at the top, Apple, Google, Amazon, Facebook, they're all $1 trillion companies. The market cap of the market was huge. And so brokerage firms, as long as you had a few Apple shares in Google and what have you, you could borrow against it. And that brought a lot of new people into the market. A lot of newbies came in with $500 a week or $1,000 a month or whatever. And they were just throwing money into the market to try to get in on the game of the rising market. Because all we were hearing about every week from CNBC was, we set a new all-time record today. The Dow closed at an all-time high. Oh, NASDAQ closed at an all-time high. Oh, S&P, the 15th high of the year, the 15th highest close of the year. As the year went on, it became normal, and we all got used to it. Brokerage firms love lending money to customers because they get paid interest on the money, and they don't pay that interest to get the money. They pay much less to get cash to lend it to you for a pure profit. And you buy and sell stock like crazy with that added money that you have coming to you. So you buy and sell stock, which means they make more money on the turnover. They're bookies, you know. Brokerage firms are bookies. If you ever watch Trading Places, I mean, Eddie Murphy explains it perfectly. You guys are a couple of bookies, huh? Yes, we are. We are bookies, and we encourage people to trade with money all the time. Never take your money out of the market, just turn it over. And we'll lend you money against your money to let you trade even more. That's how these multi-billion-dollar skyscrapers show up all over Manhattan, and how these large institutional players and international, all these institutional banks can handle renting floors and floors and floors of the Empire State Building or the whatever building, all the Manhattan real estate. So much of it is rented by investment bankers. And then in London and in Paris and Frankfurt and Milan and Tokyo and Hong Kong and everywhere. As long as the game continues, it's great. The problem is that Amazon, just Amazon, has lost $1 trillion of market cap value so far this year. The shares of Amazon have dropped so much that the company's market cap has declined by in excess of $1 trillion. That's never been done before. It's never happened before. Never has a company lost $1 trillion in value, and yet Amazon has. Facebook has lost 600 billion. Microsoft has lost 600-800 billion. Even Apple is off 500 billion. You multiply the FANG stocks and the next top 10 biggest companies, figure out how many dollars in market cap they've all lost as a group. You're into the $3 trillion, $4 trillion neighborhood. This is money that used to be borrowed against. This is value that once was in the market that people went to their margin accounts with to buy SPACs, to buy IPOs, to flip Cisco, to get into a hot story of the day game plan. We had people out there going, "Hey, I got 150 grand in the market. It's now worth 250,000 in value, and I can borrow 250 grand from my broker to buy whatever I want." And there were people borrowing 250 grand against their accounts to go after hot stocks that were being talked about today. Company XYZ beat expectations and upped their analysts' forecast for next year's earnings, and people jump into it and they get a quick 5% return, 10% return, flip it out, and sit at the end of the day, "Well, I made $3 grand today. Yay!" My account's worth $253,000 instead of $250,000. And tomorrow is another day. That has been eliminated. That isn't here anymore. We got a taste of it on Thursday. Last Thursday, the market went up 1,200 points. And you got to wonder, why would some of these stocks go up $10, $12, $15 a share? Why did they go up that much? They didn't say anything. None of these companies made press releases. None of them talked about the fourth quarter being a fantastic quarter. None of them talked about 2023 is going to be the best year of all time. They didn't say a dang thing. And yet all these stocks went up and up and up. What caused that to happen? Well, the first 400 or 500 points of the day raised the market cap value of the overall stock market several $100 billion. And so people felt a little richer. And the day traders found that I can buy an extra 500 shares of Apple today or Microsoft or whatever. I could flip some more stock. So they'd buy and they'd sell and they'd buy and they'd sell. And the market went up 600 points, 700 points, 800 points. And that made everyone richer. The lake level rose, the water level rose, all boats got higher. More money was lent by the brokerage community to their clients, all through the phone. It's all through here. You were on the crapper when you found out you could borrow more money on your account. It didn't matter where you were. You didn't get a formal phone call or a letter. It was just an alert on your phone and on your laptops. And people started jumping into the market because it's going up. I'm getting into. And so a lot of people followed, a lot of people, the herd mentality. The sheep following the sheep, and we had a 1,200-point gain on Thursday at the close. And people are thinking, wow, this is great. This is the highest level the bear market has been for quite some time. Could this keep going? Could we go up another 10, 20%? Because there were headlines in various financial publications out there saying that the market could go higher. And on Friday, it went higher, 30 points higher. And right now, we're 30 points lower. But we haven't given any of it back, have we? Not really. And so the reality is, since Wednesday night until today, there's a lot of people out there, some more than others in dollars, have borrowed money from their brokers in the last week to buy into this market, looking for a continued rally of the stocks. Every day it doesn't happen. Every day that the rally doesn't kick in again, and we go up another 1,000 points anytime now, people get impatient. People also find that as each day goes by, they're getting closer to month end. They need cash for bills. What's coming next week? Thanksgiving. What happens during Thanksgiving? People spend money. They go traveling. They have to buy gas for the car. They bought an airplane ticket. They got to pay $100 for a baggage fee they forgot about. They've got to pick up presents for family members. Black Friday is coming. Folks are looking to put money into retail, online or in person, and that has to come from somewhere. The cash has got to come from somewhere. You're either going to borrow money from your credit card provider at 22.9% interest if you carry a balance, or you're going to dig into savings, or you're going to sell a little bit of stock and transfer 1,000 out of your account to your checking account on margin to shift the margin into a cash position so you can spend that on gifts this weekend. Who knows? Everybody has their situation. Everyone has their own unique situation. Unless the market keeps going, money's going to start coming out of this market. That's just one. Now, here's the other thing. I've already said this in a way, but I want to reiterate it, okay? I'm not talking about the U.S., just the U.S. investor here. I'm not talking about just Americans or Canadians. I'm talking about the global investors, the world over. Everybody wants to get ahead and grow their financial value, net worth, cash flow, what have you. We all have our own unique lives to deal with. We all have our friends, our lovers, our kids, our associates, our best friends, our former best friends, our co-workers, business partners. We all have our own unique situation. And as elders would have said to you, you make your bed and you sleep in it. Do you remember that old expression? We all have that situation. And so we all have to deal with how we have to deal with life as a whole. The problem here is that at the moment, it would appear to me, there isn't enough to go around. There isn't enough cash to go around right now to allow everyone to do everything they want to do. Because it was at one point very easy to raise cash to take care of obligations. You needed to fix your suspension system in your car, and you needed $1,200 real fast. You put it on your credit card, and you felt comfortable doing it because you had room on your credit limit, because you kept getting offers from your banker saying all these emails. Hey, look, you've been pre-approved for a $2,000 limit increase on your credit card, or $5,000 or $10,000. Just click here to say yes. And so you say, yeah, okay, I'll go from $5,000 to $8,000 in case of emergencies. Well, car came up with an emergency problem. I need $1,200 for my car. Good thing. Great. Then you got offers in the mail. How would you like to get our credit card from our bank? Just transfer your balance from an existing credit card over to us. You've been pre-approved for a card, and we'll give you we'll give you that money for a year for no interest, 0 interest, and we'll give you 10,000 bonus miles, and we'll give you this and that. They wanted your business. They were offering you deals for nothing. And people took advantage of this. Millions of Americans, Canadians, and Europeans absolutely took advantage of these free offers for years, a decade this went on. And so capital was falling into people's laps for nothing all over the place. How many people went out and borrowed money against their home values, rising values of their homes, to get a new car, to buy an RV, to buy a second house? How many people bought a place in Arizona or in California or Florida, the winter place, on the equity of the house that they've been paying down religiously for decades, dozens of years, and now they've got an opportunity to get the second place? This is what's been happening. It's consumerism 101. It's how it works. But now we notice just in the marketplace that between Amazon and other stocks, we're off. There are trillions of dollars not out there anymore. That was leverage to make people richer. And a lot of people out there who borrowed money against their homes or other assets for very little interest rates, they took that money and put it into what? The stock market, because they felt that if I take cash out of my house at 2.5%, 3%, 4%, and I put it into the market, I can make more in the market than what it'll cost me to borrow the money. This is smart finance. This is leveraging your asset. People were doing it. The problem was that they buy low and they sell high. Unfortunately, those who think that way don't know what the low is, and they don't know what the high is, and they're never told when to get out at any high level ever. And so you have people out there who have for years and years and years been buying into the market, and for years and years and years been growing their asset base and then leveraging up with their credit cards and lines of credit. And they got 2 cars now, and they got the RV, and then they got this and they got that. And the driveway's full of toys, the garage is full of toys. Nice holidays have been taken the last decade. Really good times have been had. And everyone tells everyone else, you're doing it right. You're a winner. You're an absolute winner. You're in your mid-40s, you're in your 50s, you got a good paying gig, and you have a nice home, and the kids are growing up, and you've built assets. But on the other side of it, you forgot to take a look at the other side of the ledger. You got the asset ledger. Now there's the liability ledger, and the liability ledger is showing we owe this, we owe this, we owe this, we owe this, and the cost of owing that is going higher. The cost of carrying the liabilities is rising. Interest rates. And all of a sudden, to carry the assets we have is becoming more expensive. To fuel the Lexus is costing more money. Premium gas in California, $7, $8 a gallon. Fuel elsewhere, $2, $3 a gallon higher. Natural gas has gone up to heat the house. Electricity costs to keep the condo cool in Palm Desert has gone up. All of a sudden, to carry certain assets has risen, and the income level hasn't. And this is where this entire economy is teetering. It's getting kind of kicked around a little bit. There's a few elbows being thrown around here, kind of like a roller skating derby here. Couple of elbows in the corner being shot around, and people are going, whoa, I wasn't expecting that. I'm still moving forward, though. I'm okay. And this morning we hear, look at the market cap of Amazon. $1 trillion lower, just those guys. The backbone of the internet. They're the backbone of e-tailing. They are the e-tailer of e-tailers. And these guys have lost $1 trillion in market cap. Still 1.2 trillion. It's not like they're broke. It's not like they're a nothing company, but they're nowhere near where they were. And they're not going back there for a long, long time. Because what's beginning to happen here is Americans are realizing, Amazon is moving merchandise, but the margins are thinner. They're not making as much money per package. The cost of an Amazon employee in the last 5-6 years has really gone up. and the employee of an Amazon factory or warehouse saying, I'm not working for 8, 10, 12 bucks an hour. I got to pay $6 a gallon gas for my diesel RV, my diesel pusher. I live full time in my diesel pusher that I used home equity to buy, sold the house off finally, and I own this thing. And to move this rig 10 miles cost me $6, $7 in gas, $5, whatever the price of diesel is, wherever we're talking about. These folks are going, I'm not working 6 hours today, 8 hours, 10 hours today to make $85, $100 gross, take off the taxes and all that crap. Got about $75 today net in my pocket. And to get $75 of diesel, that gets me what, 11, 12 gallons? How far can I go? I can go 100 miles from here. That's not going to work for me. 15, 18, 20 bucks an hour, and up it goes. And so Amazon knows the score. Walmart knows the score. Target knows. These folks who hire seasonal have to pay more. You want to run a Burger King franchise, a Wendy's franchise, a McDonald's franchise in certain parts in the United States, Canada in particular, you got to be paying 15, 18 bucks an hour. Because on top of that, of course, depending on the state or province, country in which you're located, there are certain add-ons that you have to add on: pension, unemployment, healthcare, blah, 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 blah. In Canada, a burger flipper can cost a franchise owner $25 an hour, all in. Might be 17 in cash to the employee, but the rest is deductions and everything else. It's serious money here. This is crimping people's lifestyles. Things are getting tighter, and the customers can't come in and pay $9.99 for a Big Mac. A Big Mac, it can't be $9.99. It's got to be $4.99, $5.99. It's got to be the cheapest item they can buy, because it always has been the cheapest item they can buy for what you're getting. This market and this economy is in a real flux right now. And for option writers, you guys are in the sweet spot of sweet spots. Keep reminding you guys, you're doing it just right. You're in the right place, offering the right product to the right buyer at premium prices. You don't have to worry about inflation. Inflation actually is your friend. High interest rates, it's your friend. A lower market cap situation makes you richer. Funny, weird, but true. Those of you who are able to write contracts, buy them back for less money, acquire additional shares on sale, or deepen the money option contract, and keep writing additional contracts, you're growing your portfolio's performance. You're bringing in more money every month than the month before, than the quarter before, the year before. And it's going to continue to do this. You're going to continue to be able to grow at your cash flow coming in. And for a lot of you out there who've been here over a year with me already, 1.5 years with me now, you're bringing in the kind of money that allowed you to walk away from your day job a long time ago. Whether you did or not, that is irrelevant. You could have, and many of you have. And there are a ton of you here who've joined this channel in the last year, 6 months, who are now really getting the handle on how option writing works. And you guys have figured out, oh my gosh, in the first 3-6 months of doing this, I was hoping I'd bring in $1,000 a month maybe in premiums. I'm bringing in $3,000 a month in premiums, $4,000 a month in premiums already. I didn't think it would be this quick. And it's the same trade I made when I wrote my very first contract. The same trade. I'm just writing 5 at a time, 8 at a time, 10 at a time. And it compounds itself. You're really seeing the power of compounding by writing calls, buying another deep in the money call, writing more calls, buying another one, writing more calls, and so on and so on and so on, because the option buyers are out there. Many people in the option market today were not in the option market 2 years ago. 2 years ago, there were people out there with lots of cash on hand, lots of cash flow on hand, and access to a lot of additional capital that could afford to just buy stock. And what they did is they opened up their Robinhood accounts and their Fidelity accounts and their Charles Schwab Slice accounts, and they were buying fractional shares of everything. And they would buy Amazon at $3,000 a share, sell it for $3,100 the same day. And they would do this with 5 shares, 15 grand worth of stock. They bought 15 grand worth of stock, sold it for 15.5 that afternoon. Consider themselves geniuses because they made $500. Fabulous stuff. And at the time, they only had to put up half the cash. They had $7,000. They could borrow the other $7,000. In some cases, they only had to put up $5,000, and the broker would lend them 10. Day trading, some will lend you 5 times as much. Put up 5 and play with $25,000. All borrowed money. These folks were doing this. And as long as the markets kept hitting new all-time highs, every few days, every week, new all-time highs, it kept on going. The party was a good party. It ended last fall. And then we found out in January, February, the Fed is going to raise interest rates dramatically, aggressively. Inflation was not transitory. And on we went. And here we are in a bear market in an awful hurry. And people are now trying to convince people this bear market is about to end. We're going back into a bull market again. Because, with interest rates going from 0 to 4 or 5%, and mortgages going from 3 to 7%, and inflation going from 0 to 8, 10%, that is all solvable in 3 months. We can take care of all that in just 3 months. That's how sophisticated we are today. And now we can go right back to that 10-year game that we were playing before. I got bad news. It's not the way it works, and it's not the way it's going to happen. And interest rates are going to go higher, and inflation is going to go higher again. Inflation has not topped out. It's now embedded in the American economy, the Canadian economy, the UK economy, and so on. The UK government today announced a delay in some of their economic moves that they were going to make. Why would they do such a thing? Well, quite simply, the UK knows, well, let's put it this way. The individual running the UK economy, running the interest rates, setting budgets and so on, is the Chancellor of the Exchequer. That's known as the Finance Minister. The Finance Minister is an elected member of Parliament. Elected members of Parliament have to go to the voters every once in a while to get re-elected. And if you are the kind of guy that is going to institute all kinds of spending cuts right now and all kinds of tax increases, what do you think your odds are of getting re-elected in the next year and a half when they have their elections in the UK? Well, what do you think the odds are? Negative 1 million % or negative 2 million? There's no chance. No chance of getting reelected. So you do not, repeat, you do not raise taxes on your population just before you're calling a national election. You don't do that. You do that the week after you get elected. Because the week after you get elected, you go, oh, the cupboards are bare. We got to raise money. We're going to have to double down now. Tough times. Because that's what the voters elected me to do. No, they didn't. No, they didn't. You didn't say anything about this, but that's how this game works. And so we have tough times showing up in the UK. Inflation will be 12 to 14% in the UK this year for 2023. You can count on that. European inflation is over 10%. It's going to be 11, 12% as well. America inflation is likely to reach 10% in 2023. Sorry, kids, but it's coming. And this market is going to react violently in the wrong direction for the bulls, because the bulls are going, hey, come on in here and borrow money and trade stock. It's all great. Never sell, or reallocate, but never sell. North American investors and other investors in North America are going to go, why would I pay $120 a share for Amazon when this stuff was $88 a share a couple of weeks ago? And they're losing money. Why would I pay more than $100 a share for Disney? They're losing money. Disney. How does Disney lose money? They got the parks. They don't have to convince us how much fun they are. They got the movies. They don't have to convince us to watch Snow White for the millionth freaking time. They got streaming. They own their own streaming service. They don't have to pay royalties to anybody. They keep it all for themselves. How do these guys lose money? When you got 200 plus thousand employees and you got to give them 15% pay raises, and your parks are operating on electricity and goods and services that are rising in costs 10, 15% a year, you can't raise your ticket prices 5% a month and get away with it. You raise your ticket prices often and you upset everybody when you do it because it's upfront and it's national news, but you can't charge $20 for a Diet Coke inside those gates. The fallout will be severe because people bring their phones inside the gates and they tell their friends how expensive it is now inside the gates. Not good. So they're having trouble. That's how they're losing money. They can't make it fast enough to handle the increased cost of being in business. This is Disney's problem, and that's not going away right now. Any kind of a slowdown in traffic into the gates, any kind of a pullback with people who are going to say, I can't afford to travel. I was going to go on a holiday with my family next summer, next spring or February in Florida. We're going to do that. A hotel in Orlando, a rental car in Orlando, the gates admission into Disney World, all the food, we're talking 15 grand for a week for a family of four. No, not going to happen. Canadian families are looking at American dollars and are going, there's no way in hell we can go down there. There's not a chance we can go down there. We're going to have to go somewhere south for cheaper. And that means Cancun, Mexico. That's what this means. Cancun, Mexico, all-inclusive 1 week stay at 1,000 room or 2,000 room or 5,000 room resort where the kids can frolic in the pools over there and mom and dad can relax, at the pool to get a tan. That's it. This idea of spending it in America, not going to happen. Not for Canadians, not for Europeans. They're going to fly all the way to Dominica. They're going to fly to Havana. Those Canadians and Europeans who go to Cuba every year, they're going to Cuba because Cuba is cheaper than Mexico. And Cuba is desperate for cash, desperate. They offer very good 2- and 3-star resorts. Again, cheap holiday for two for a week. You can't beat Cuba. Americans, of course, can't do that, but Canadians can, and they do. And the Brits and the Germans and the French and the Italian and the Spanish, direct flights, chartered direct flights into Cuba by the hundreds of thousands a year who don't come to America. It's too expensive. They'll go to Dominica, they'll go to Mexico, they'll go to other countries where it's a cheaper lifestyle. Sure, but high-end resorts, no chance. Have you ever noticed how there aren't a whole bunch of all-inclusive resorts all along the Gulf Coast of the United States and all the way up and down the coast of California and all the up and down through Florida and up the East Coast? There are very, very, very few all-inclusive resorts, meals, drinks, and accommodation in America. Why is that? There's beachfront all over the place. You'd think there'd be the ability to build these things. The reality is to staff an American staffed resort with legal American workers. The word legal comes in here. Can't be done. The Americans can't afford Americans. Let's get to the quick. Many Americans cannot afford Americans to holiday with, or through. It can't be done. That's why there are no cruise ships operating in the United States other than one cruise ship in Hawaii by Norwegian. There are no American flagged cruise ships going from New York to Miami to Galveston, through the Panama Canal, up to Los Angeles and all the way. There's no America to America cruising going on. It's to another country, and it's by foreign flagged, foreign staffed cruise lines, cruise ships. There's a reason for that. And you could say it's a wonderful thing, it's a terrible thing, it's a whatever thing. It's reality. And it's been this way since the 50s. Nothing in the last 15, 20 years. This isn't a Joe Biden thing. This has been like this forever. Americans are experts at exploiting the rest of the world. And so are Canadians. We're good at this too. Don't think I'm not picking on America. I'm not picking on America. We North Americans are experts at utilizing the world for our services and our wants, needs, and desires. We wear clothing made in Bangladesh and Myanmar and other places where they get $1 a day if they're lucky. We buy shoes. We buy kitchen appliances. Our microwaves are made in third world countries. All of our toys, all of our stuff that's in our garage that ends up at garage sales is all made outside of our sphere. Very, very little of our physical stuff is made here. We can't afford our own stuff. And so we have it made elsewhere. And for vacationing, we are experts at figuring this out. Americans head to Mexico. Canadians go to Mexico, Cuba. Europeans go to Mexico, Caribbean, Cuba, and they'll head to Mallorca. They'll head to Africa. They'll head to Morocco. They'll head to Algeria. They'll head to the resorts on the Mediterranean Sea in Tunisia. They are dealing their money. They're spending their euros where they get the biggest bang for their buck, just like we are, like we do. We're exactly the same. And why shouldn't we? We have to look out for ourselves, don't we? Who are we going to rely on? If you're a multi-billionaire, you can afford to stay in the most expensive resort on the French Riviera, no problem whatsoever. But that's 0.1% of the world. The rest of us, we got to find out where we can get our best bang for the buck. Welcome to the real world. Here we are in the stock market right now to bring it all back to the market. The stock market has bled out billions and billions of dollars of market cap. It's all gone. It's all evaporated already. Even though last week, Amazon, the last couple of weeks, Amazon went up 17% in value. Yeah, went from the 90s to the 100 range or something like that. Big whoop. This sucker has lost $1 trillion of market cap. And that's just one stock out of hundreds out there who have lost a lot of value in market cap. The air is out of the balloon. You heard the term. The balloon was going to pop. We heard this, the bubble. We heard about the bubble last year. We heard it in real estate. We heard it in equities. We heard it about bonds. It's all popped out. It's all still seeping out. And for the equity players, which is what you guys are, you're never going to be expert currency traders. You're never going to be expert commodity traders. You're never going to have a seat on the stock exchange. You're never going to be an institutional investor. You're going to be what you are now, an individual who's trying to make it work for you. The one place that you can sit back and go, I can make money here. Options, writing options. Offering time as an asset. You can offer time to option gamblers. And there are many, many more now, as I was saying a few minutes ago, way more option gamblers now than there were 2 years ago. Because as I said earlier, 2 years ago, they were buying and selling the stock on margin. Today, they got to play with cash because they don't have enough cash to borrow against it to buy enough stock to make any money. So what are they doing? They're playing the options market. They're buying calls. They're trying to buy calls on GameStop. They're trying to buy call options on Apple, HBQ, Cisco, Pfizer, all the stocks, Amazon, Google, all of them, every single one of them. They're trying to buy low and sell high because that's all they know. They don't know the other side of the market. They never think about where do these options come from? Who am I buying these from? How are options even created? How do they actually work? They don't know how they actually work. All they understand is from a friend at the office, a friend at lunch, a relative that they know, they watched a video somewhere, they realize that if they can buy a stock option on a stock that is about to make a nice run, they could take $1 and turn it into $2 or $3 or $4 or $5 very quickly. And there are folks out there who need $5,000 by the end of December for whatever reason they need it for. Gifts, bills, IOUs, whatever. And they've only got 1,000 right now. And they got to turn that into 5,000 by the end of December. And they don't know how else to do it. They could drive Uber or Lyft on the side and make a few bucks. They could get a job in the evenings doing whatever for 15, 16, 18 an hour, but they're not going to get $5,000 in their hand doing any of that kind of work. They'll get 1,000 or 1,500 or 1,800 more, but they're not going to have what they need. But they're thinking, oh, what if I could buy $1,000 worth of option contracts on GameStop? And if GameStop would go from $26 to $35, I could take 1,000 and turn it into $5,000. Or if Apple were to go up $8 a share, or $10 a share, or Amazon, or Google, or any of these, can I turn one into 5? And this is who you're selling options to some extent. It's this kind of mentality that you are selling options to. This is the buyer, a lot of them. And these are easy people to make money out of because they're in a hurry to make money. They're in a hurry to gamble. And this is why Vegas does so well. Las Vegas, with their beautiful casinos, the water fountains and the free drinks and the beautiful lights and nice, gorgeous lobbies and beautiful twinkling slot machines. They know they make most of their money from people that are in a hurry to gamble, because you have to catch a flight back home eventually. And it's in those last 48 hours, those last 24 hours, if you're there even that long, that they make the most money off of you, because you're exhausted. You've been partying like there's no tomorrow and letting your hair down, and you're off a couple of grand, and you're trying to make some dough back before you get on that airplane. Because you know you can't play this slot machine where you live for whatever reason. And so you gamble like crazy to try to make it all back. And Vegas loves it on Sundays when people have to fly home on Sundays. They know Sunday night the casino will be very quiet in the hotel, because most people are checking out on Sundays. Yeah, there's some folks who check in, but more check out than come in. And they know that all those folks checking out, a high percentage of those folks are leaving town having lost more money than they thought they were going to lose. We lost 1,000. We thought we'd lose 300 or 400, but we lost $1,500. Oh, well, we'll just have to work harder when we get home. Casinos love this. Option writers love option buyers. Option buyers are in a hurry to make money right now. Option writers cross their arms and go, I'm easy going. You want to buy my contract from me at this price? I'll sell it to you. Yeah, it's 3 weeks to go. It's out of the money. You're handing me the money now. Beautiful. I can walk away from this deal anytime I want, but I think right now I'll just cross my arms and allow the market to play itself out, and you do all the worrying. You worry about how you're doing, because you just paid me $450 for a contract. You paid me $450. You paid me I got 10 people that paid me $450 each for their contracts. I got $4,500 of all these folks' money. And I'm going to sit back and say, well, I might give back 2,500 of it, 2,000 maybe. I'll assess that later. Watching Uncle Bruce's classes has taught me a couple of valuable lessons. One of which is don't buy back your calls too soon. Because if the market is, I can't find a better deal than the one I got, I think I'll stick with the one I got, and I'll just let this deterioration continue. Because I know one thing, watching Uncle Bruce's classes, contracts have a limited time frame for existence, and they will eventually evaporate in time. They will just run out of time. And if they're out of the money, they're worthless. So I know I can buy this contract back for less than I sold it for. The question is, how much less? And as I do that, what is the next move I need to make? I have to also figure that out, because that's another thing Uncle Bruce taught me is don't be thinking you're going to buy a call back and then try to find your next trade. No. You've already figured out your next trade. You already know exactly what you're doing next. And so now you're actually eager to close out this buy and make this sell happen right away, because there's a whole pile of additional capital coming into your account today so that your balance is even higher. That is the name of the game around here. The name of the game out there is desperation, and it is going to get worse. There are going to be more layoffs. There are going to be more furloughs. Watch January and February, how many surprise announcements are coming out from corporate America and corporate Canada and corporate everywhere else. The number of people that will be let go in January, because right now it's politically very so to let people go right now. As each day gets closer to the holiday, you don't want to do layoffs in the first week of December. That's not good for your image. You do the layoffs in the first week of January when everyone else does it, and you can bury your layoffs in with everybody else. Do not be surprised if you see a huge number, increased number in the layoff department and furlough department of many, many companies. We're already hearing about hiring freezes and attrition and all that. We're hearing that already, but we're now going to start hearing about the shock of people who are going to be going, I had no idea that my job was going to disappear when it did. I've been here 17 years. I just got a promotion 2 years ago. They love me. I got let go. This is coming. This is the next phase in the program. Hence why so many of you are here and are joining us now saying, show me how to write these options. I want to bring in an additional income source into my household without having to go and work 8 hours a week more or 20 hours a week more at a Starbucks or a whatever. I'm exhausted. I physically cannot be on my feet for another 3 hours a day working for somebody else. Can I do something out of my house with what I already have? I don't want to have to buy any equipment or anything like that. I need a laptop. I need one of these. I have one of these. I have a laptop. I already have one of them. That's all I need to do option writing. Oh, okay. I've got internet. Oh yeah. Okay. Yeah, I can do that. That's what people want to know. That's why they're here. They're figuring out I can add income to my household without having to spend 10 grand on a chip mobile or $25,000 on a some kind of a donut making machine or anything like that. No, I don't need to do that. I don't have to go to state fairs and flea markets on weekends to make a few extra bucks. I can make money Monday to Friday during business hours. Since I'm working from home as it is, I can do this from home, hang out with this guy, as balding as he is, but I'll tolerate it. I'll just listen to him. I'll listen to him. I don't have to look at this guy, and I'll follow this market, and I'll learn how to write options. And boy, if you, Bruce, in any way could help me bring in $2,500 a month additional income, you could bring me that much, even if I got laid off and let go, I'd lose my X amount of dollars a month job, but I know I can replace half of that revenue doing something else, plus what you're doing for me. There it is right there. There's no suffering here. You make me more than $2,500 a month in my pocket from option writing? Oh, we're ready to talk. Let's see what happens. By the way, talk about ready. Larry Titus is ready. We're up, we're running, we're open, we're trading, we're here. Another week has begun. The ranting, the raving doesn't have to go on anymore. Oh, it's wonderful. Bruce will just, talk about the stocks now, and he won't, yap about the old days. Welcome one, welcome all to the show, the channel, the hopes, the dreams, the aspirations that you all have. Welcome to the party, pal, as we like to say around here. It's Christmas time coming, which means it's time to watch Die Hard again, because it's one of the greatest Christmas movies ever made. You all know that. Ho, ho, Oh, as we like to say. Thank you all. We've just gone to member-only mode on commentary. Please join this channel as a member ASAP, please. I would love to have you join us. That would be beautiful, beautiful, beautiful stuff. Thank you all for being here. Those of you who want to have a one-on-one with me, I'm running out of spots already. Hang on a second. How do I do that? Oh, okay, I got it. Just checking on something. Okay. And there it is. I'm just sending out someone. Quickly running out of spots. I only have this Sunday available. And I have next Sunday available. And then we might be done for a while. Let me double check here because Jen and I are leaving soon. Let me take a look here. Yes, we're available. I'm available this Sunday and next Sunday. After that, I don't know at the moment exactly what is available. So if you'd like to have a one-on-one with me during Thanksgiving week, you've got a few days off and this is the Sunday you can pick to see me. Great. Get a hold of me with an email message as soon as you can and say, hey, would love to have a one-on-one. My wife and I want to sit down with you, have a chat. I started option trading and now my wife is into it or vice versa. And we really can't believe the difference this has made in our lives already, but we want to make sure we're doing this right. Are we truly maximizing the whole thing here, or are we leaving money on the table? What are your thoughts? Or this is our portfolio right now. This is what we got. We're in line to we're probably going to inherit this or that in the near future because of mom and dad and changes and life goes on. Help us out. This is a chance to kind of call on Uncle Bruce to help review where you're at, and if I can throw in some advice, great. Give you an outside view on what you might want to look at, great. Let me know. Just let me know. Okay. Thank you, everybody. Welcome one and all. Bama Babes says thank you, Larry Titus. Yeehaw from Constantine. Thank you, everybody. And welcome one to the all of you to the party. Constantine, GameStop 2705. Let's take a look at GameStop right now. We'll double check this here. 2720 right now, I see. Up 110 on GameStop. The Dow down, I think it's down 13. Let me see if this is accurate. Yeah, it looks like it's down 13. And we're negative 14 on S&P, down 100 on NASDAQ. Oil down $1.35. That's what's happening right now. 2730 on GameStop, a little pop higher. Always use pops like this as an opportunity to write contracts. If this stock price move allows you to do a rollover, fabulous. For some of you, you couldn't do a rollover on Friday because the stock didn't go high enough, but maybe now this move is high enough. I don't know. Depends on the position you're sitting on with your contract. If you want some advice from me, let me know, and I'll do the best I can. But way to go. Constantine, Uncle Bruce, my December 23rd, 25s at 286. It's 492. I'm 72% in the red on this contract. What should I do? Here's a classic example right here. Great answer, great question. So I suspect Constantine has December 16 contracts, the third Friday in the month, I'm guessing. He might have 23 of them, I'm not sure. Should he worry about this or do anything about it? The stock's 27.12 right now, so those contracts are 212 in the money. He got 286 for them, and they're 212 in the money, so theoretically they're worth $2.12 in book value plus time, which is the third Friday of December, a month from now, right? Couple of choices. One, do nothing, cross your arms. Stock's already backing off to 27.01 after topping out here at 27, whatever it topped out at 27.38. It's already given up 38 cents. So all of a sudden, that contract is dropping in price, which is good for Constantine. That's one. Number two, if the shares want to go higher, because they fluctuate, it's pulling back a little bit, 26.86. What if it pulls to 27.86 later today? The next 15 minutes, hour, 2 hours, whatever. Constantine might decide, I could buy back my December 2025s, and I could write January 26s. I might be able to do that. And if I did do that, it's possible I would get just as much money for the January 26s that the December 25s would cost me. I have to check the option market, of course, because it'll fluctuate with the stock. Or I might even get more money. I might actually get more cash for the December 26th because it's in the money too. But it has that extra month of time, and I might be given like $1 a contract more in cash plus a $1 run up in premium. That's $200 a contract more to me, which is times 23 contracts, $4,600 difference to my account. That might be one thing I might do. On the other hand, I might just cross my arms, like I'm thinking, like this might be the idea to do nothing. Let the stock, figure itself out. It's 26.86 right now. So it's given up 50 plus cents in 3 minutes, if that. I mean, it's really backed off quickly. This little run might have been a first 10-minute little pop, and now it's all over. And now we're coming back to $26, and we might even be in the red later today. And if the case is that the stock is 25.50 this afternoon, Constantine is going to be going, well, yeah, they got up to 27.38. But they're now 25.50, and I'm only 50 cents in the money. I got 286 for these. I'll just sit here and let these contracts depreciate because that's what they're going to do. So Constantine is in a no-lose situation right now. He can either make a move if it works or not make a move, and it could work. And right now, not making a move is probably the right idea. 26.47 on the stock. It's now down almost $1 from its high of 4 or 5 minutes ago. Talk about a dead cat bounce on GameStop. Holy crap, it's only up 33 cents. The low today, 26.30, and it's at 26.43 and still falling here. It looks like it's, that's what it's doing. Sit tight, keep your arms crossed. Let's see what happens. We need to give this stock a half an hour to let it sort itself out. It will go up and down, though. It's going to move 50 cents up, down, up, down. So we take the patient approach here. No big deal. All right. Some big finance channels pumping AMC also encouraged everyone to use FTX. Stephen Graham, Andre, Zeke, Jeremy. Oh, my gosh. Splair, looks like I could sit back today, relax, collect money when possible. Tiff, can we give Uncle Bruce a big thanks for not advertising FTX? They paid a lot of money to many YouTubers. Those people probably approached me. They probably did. I know I've been approached by a lot of these crypto exchange services that wanted me to recommend them to you. I just did. I don't touch crypto with a 10-foot cattle prod. No, thank you. JR, Uncle Bruce Wing Commander is delivering a workshop today and wants one of us to ask about this being a good time to write Poor Man Covered Calls on GameStop. Your perspective. It's always a good time to write Poor Man Covered Calls on GameStop. It's always. The key here is if you can acquire a Poor Man Covered Call under that 90-10 rule and then immediately write a call against it to bring a nice percentage of that cost in right away, that is a smart move, and especially if it's an out-of-the-money call option. I like it. But we'll see. I mean, 26.60, we're up 50 cents now. We got up to 27.38. Now we're backing off. We're coming back on again. It's this changes minute by minute, as you probably all know. Nick, Alberto DQ Tesla coming your way. We're at 189.80, down $6. Coming down on the Tesla. Apple down 96 cents to 148.74. GameStop holding a 67.70 cent gain, something like that. SoFi down 11, 5.84. HPQ 30.29, down 26. Amazon down $2 a share to $98.61. Home Depot up 46 cents, now up 24 cents. Cisco up 18 cents. Pfizer up 94 to 48.54. Netflix 268 at 292.82, up 268. That's overpriced. IBM down or up 19 pennies, but only 19. Microsoft is down 6.16. Vanik down 121. Adobe down 380. Goldman down 340. Google down a buck. Boeing down 18. Moderna up 780. Very interesting run on Moderna. Meta down 24 cents. ME down 4. Rocket Lab down 21. Matterport down 11. ATIP holding at 69 cents. Smart Rent down 13. Spire down 4 cents. Xterra down 4 cents. Royal Caribbean is up 3 pennies to 58.50. What else we got here going on? Target up 16 cents. Costco up $3. Walmart up 26 cents. Disney up 14 cents. Nvidia down $2. So more negatives than greens, I think. We're up 45 on the Dow. We've got the rest of the market now down 14 on S&P and down 110 on NASDAQ. And there's where the bleeding is coming from, where the stock had the biggest moves. NASDAQ had the best run last week. It was up 6-7%, 8%. It's off 1% this morning. We'll see if the Dow wants to buck this or join the party. We'll find out. Okay, there you go. Alex, Uncle Bruce, I watched lesson number 12 last night. Really, really helpful on rollovers. There's now less chance that I'm going to screw up the next one. There you go. Right on. There you go. These classes, they're $150 a piece. If you learn anything from these classes, the number one thing I'm hoping you get out of them is you don't make mistakes. I can reduce the number of mistakes that are made on how options work and how they react and how they price out and how they depreciate and how you execute rollovers and all this stuff. If I can help you minimize the wrong moves, that's more than worth $150 for a class, which you can watch again and again and again to remind yourself. Get it through that thick skull of yours. Here's how I do it. Don't do this, do that. Don't do that, do this. This pays for itself again and again and again. Just think about it. If you're writing 10 calls in the next month and you can make 15 cents profit or more on 10 calls in a month, that's your class right there, $150. If you're making $1 a class, or you didn't lose $1 a contract because you didn't screw it up, times 10, you didn't lose $1,000. You invested $150 not to lose $1,000 this month and next month and the month after that for the rest of your life. $1,200 a year, $12,000 a year you're not losing for the next 20 years. There you go. There's $24,000 return for $150. That's one class. There you go. You have to want to invest in yourself to give yourself a chance. There you go. AMC halted, says Nathras. Constantine, thank you, Uncle B. Nick, snow has gone up 19 plus 14 going for the slaughterhouse. Hope you shorted, everybody. Coyote, they are all grifters ripping off the apes. The splitter, yeah, that's how they called it. Mr. Premium of the option, AMC's halted. Okay. Congratulations, I guess. I don't know. Let's see what's going on. Alex J.R. Wing was asking if now is a good time to buy GameStop contracts to write poor man's. You had one job, dude, one job. Christina, remember, we had a bunch of time decay to come off this week. It's only Monday. Also, I'm really talking to myself because I get itchy to roll. There's the hardest part is being patient. Splayer, for sure, thanks for that. I think there was some question during the middle of the winter, but let's go. Nick. The Federal speaks all over the place this week. You know what that means? Dude, just crossing my arms here. Most of my contracts were rolled into January already. I'd like to raise my strike price on one, though, incoming. Let's take a look here on this market now. We're down 38 on the Dow. We just went red. We're down 22 on S&P, down 136 on the NASDAQ. So we're going red across the board now. Oil off $1.24. Tesla down $8, 187. We're going lower, probably 150. Apple 147 down 2. GameStop 26.60 up 50 cents. That's it. SoFi down 18, HPQ down 43, Amazon down 303, Home Depot down $1. Over on AMC and the other guys, the Ape, where are we at here? Okay, AMC was up 35 cents at 7.55. We're back up and running. Ape down 3. Great. Good luck. The combined value of these two is a little over $9 from what, 27? That's where they were when they announced the split of this stuff. Yikes. There you go. All right. Paul Rodriguez, let me rephrase the question. If GameStop is burning more cash in the something this year, do you think that GameStop will sell shares in the market, bring their stock price down? Just curious, your thoughts. If they were running out of cash, they'd consider it, but they're not running out of cash. I think they got 800 million lying around, like just short of $1 billion in cash. They have no debt. The only loan they have is a French government COVID loan of $40 million for 1% interest or something stupid like that. This convinced GameStop to not close their warehouse in France. So it's a nothing burger. It's a, I don't know, 5-year deal, 10-year deal. It's a nothing deal, nothing to impact the stock. They are losing what, 100 million a year? They got enough money for 7 more years in cash. Ask me this question in 5 years. We'll see how they're doing. If they keep losing this money. I doubt they will, but whatever. JR Splair, I need to better understand those numbers and what they mean in plain English. Got it. JR, Uncle Bruce, class number 14 has been a game changer for me in understanding poor man cover call strategy and how to maximize profits using it. Also, thanks for the encouragement for not fear being assigned. Happened to me, and after the dust settled, I came out a winner. Rinse and repeat. There you go. You're more than welcome, and thank you for the very kind words. Lame Duck, thank you for thumbs up. 1656. You gotta love this. Dude, I wrote an in-the-money cover call on GameStop. January 20 for 2023. It was a 22.50 contract, and I got 365 for it last week when the stock was at the bottom. This morning, it's now $7. If I want to buy it back. And it has been dropping. I'm thinking there's not enough of a pop to roll yet. Wait for decay. Well, you got till January, so you are in no hurry here being October 14th to do anything. In theory, in pure theoretical terms, you could be assigned. They could take it off you and buy it off you for $22.50, and you'd keep the 365. So you're getting what, 26 bucks is what you'd get, ballpark. What's the stock at? 26.50. Are you worried? No. It's trading at $7. It's worth what, $3? I mean, it's worth $4 value. So there's $3 of time decay that is on your side. Now, if it only dropped to 4, from 7 to 4, you'd still lose 35 cents. Oh no, what a shame. But the stock was at the low when you wrote the call, and the stock is now 26.50. You're richer on your stock, even though you're lower on your call. I would bet you that in the money call you bought, the deep in the money call, is worth more money on the gain. It's gone up more in value than your call that you wrote against it. My hunch is certainly a break even anyway. You got nothing to worry about. If the opportunity presents itself where you could roll into a February contract at 24 and get just as much money for that call as this one would be to buy back, and you'd move up $1.50 and strike, it's worth the thought. On the other hand, if you could get more money because you're offering another month of time to an in-the-money holder, can you get $8 for a call that you would buy one back for maybe 6.5, 7? Could you pull off that kind of a game with a higher strike? If it's available, but something tells me that as each week goes by, that's a stronger likelihood. Remember, next week's only 4 days of trading, not 5. So the appreciation accelerates next week. Okay. Fun times.
Fun time.
Hey, Auntie Jen, how are you doing?
You gotta stop trading. You gotta start eating pumpkin pie.
You know, if we were in America right now,
Sugar pie.
they'd probably have the pumpkin pies out, but there are no pumpkin pies out here.
Not so Christmas.
Driving us nuts. We don't like it. That's my cold.
Oh, okay.
What's the matter?
Well, it just looks weird.
It looks weird. What you put in it?
Nothing.
What did you do?
Yeah.
Boo,
Nothing yet.
something's gonna happen. It's not gonna be pretty. Well,
How are the
so
markets today? Little red, little green.
we started red, little green. Now we're red. You know, we had the 1,200-point run on Thursday.
Yes.
We gained 30 on Friday
Yes.
after being down 300.
Yes.
We're flat right now, although
There
the
you go.
Nasdaq is down 124, which is 1.1%. Nasdaq went much higher than everybody else last
Right.
week. It was really going. Heard something this morning that I found really interesting.
Okay.
Just Amazon,
Okay.
just that stock, from its high to where it is now,
Okay.
$1 trillion of market cap has evaporated.
Whoa.
1 trillion. That's
Wow.
never happened before.
Well, that yeah.
Never has a public company
Companies have
lost-
never had the ability to lose money.
No, never has a public company lost $1 trillion of book value.
Yeah.
Enron was a $600 million bankruptcy,
Yeah.
but not $1 trillion book value. Now, Amazon is not going out of business. It's still worth $1 trillion, but it was once worth over $2 trillion. But I took a quick
Wow.
peek at Tesla, Amazon,
Yeah, yeah.
Google, Facebook, Microsoft, and right
And
there.
really, just Amazon has suffered that.
No. They've all lost money. But collectively,
But
you look
yes.
at the top 10 or 20
Oh yeah.
NASDAQ
imagine.
100, they've lost $4 or $5 trillion
Yeah.
combined. Like it is trillions of dollars.
Yeah.
This was money that used to be margined.
Absolutely.
This was money that was value.
It was
of-
used as an asset.
like think of it this way: there
Yeah.
was $4 trillion of asset value out there, and people had borrowed $2 trillion against it.
Mhm.
So that's $6 trillion of dollars out of the market. $6 trillion that isn't here anymore, which means
Erased.
we don't go to record highs now. We're not going to go to record highs because you need capital available to run a market. More buyers and sellers, more money coming in than coming out. Right now, the problem is there's money coming out of the market because of other obligations that are coming up at the end of the year.
There you go.
So it's been an interesting morning
So
to say the least.
is this a comment on your community?
Oh, it fell over.
No. You're mixed nuts.
No, it's just holding up my. It's holding up this thingy.
Oh,
That's all I was using. With nothing reading anything into it.
mixed nuts.
I do the best I can. What I have. How you interpret it is up to you.
There you go.
Paul did not die in 1966. He didn't die.
Elvis did die.
Elvis, well,
We're all
eventually
going
he did.
crazy. It's all in your head.
There you go. Yeah, Elvis looked great the last 3 months of his life, didn't he? Was
I
it?
can't remember.
He was a peach.
That's a country song. I can't remember who sang it.
Country song about what?
Matt, we never walked on the moon. Elvis ain't dead. You ain't going crazy. It's all in your head.
Any of you out there? It's over to you.
Diamond
guys.
Rio.
Diamond. Okay.
There you go.
Oh my gosh, too much
You
fun.
ain't going crazy. It's all in your head.
Marcus is saying, hi, Bruce and the gang. Great lamp there, man. What lamp? Please don't say my name, but now for the needed update because I was gone a while. Okay, Marcus, I'm not saying your name.
Yep.
Marcus Bauman, living at 123 King Street. Do we still believe that Spire will go up eventually? Yes. Next question.
Do we still believe?
Of course we believe. Spire, maybe Uncle Bruce can explain Greeks as well as plain English. No, not going there. Zed, I wonder what Uncle Bruce thinks. Why is GameStop special? I don't know. Why do you think it's special? What are these stupid questions this morning? Good morning, Auntie Jen, John. Good morning, Jen. There are no stupid questions. There's just Zool. There's only Zool. Good morning, Auntie Jen. Come to America to get your pie. Enjoy your
Do you know
day.
that John Anderson sings a country song you like?
Oh yeah, two of
Straight
them.
Tequila Night
Two of them.
and Seminole Wind.
Seminole Wind. I like both of those songs. I remember Jen and I drove to Vegas, Palm Springs, back when we were living in Creston. This would have probably been like 2018, 19, before COVID and all that. I remember we drove all day from Creston across the border, and we ended up in Jackpot, Nevada.
Oh yeah. Oh, we went really far.
We went all the way to Jackpot, Nevada, and that's the border of Idaho and Nevada, right there, and 100 yards inside Nevada, casinos.
Yeah, we jumped across the highway to get to it.
Yeah, and there were like 3 of them, and the biggest one, I don't even know what it's called, Cactus Jacks. I don't even know what it's called.
I don't know.
They have
the first one.
They had the billboard, and they had entertainment, and who was there?
John Anderson.
John Anderson. I thought, oh man, oh John.
Hey, someone's got to play there.
John, we've come back, haven't we? John had risen to the heights for a while. He'd been, back in the 90s, 2000s, he was right up there. And then here we were in late teens, the late 20 teens, and John was it was on the downhill, and he would now be playing tonight in front of 500 people, 300 people. Yeah, not 5,000, not 15,000. We're at Jackpot, Nevada. We're not even in Reno. Reno, you could be in front of 2,000 people. Vegas, you'd be in front of 5,000. You're not even Lake Tahoe. We're in Jackpot, Nevada. We didn't watch them there either because we got in late. We'd driven all day, and we left the next morning for Vegas. We just kept on going. We were just passing through town because Jackpot is the ultimate spend a night and get out of Dodge place.
Isn't it funny how a long day of inactivity can make you so tired?
Oh, but the stress of the drive.
The mental stress.
Yeah. And for us, the mental stress was crossing the border.
Just get out of the snow.
Well, we had to get out of Canada into the America. And once you cross the border into America, you go, okay, well, I got that done. Because there's no new rules we didn't know about at the border.
I have no chicken products.
Everything's all right. Yeah, we didn't get searched for anything. Like we're okay. And then you're driving, and you've got your sights set on making let's make the real estate and head south. The problem is, the reality is, Jackpot, Nevada is very high in elevation. And there is snow in Jackpot, but there's very good snow plows in Jackpot because they know they get snow. But when we got there, it was 30 degrees. It wasn't minus 30, anything like that. It wasn't snowing. It was clear.
Yeah.
And the next morning we got up and the car's covered in frost. So you fire up the car, get the
it's not
the frost
20
going.
20 and 2 feet of snow.
Nah, it was like 22 degrees Fahrenheit. And within 3 hours of driving south, the sun has come up. Yeah. And you're in the 50s. And then you come to Eli, and then you're coming south, and you're coming to Vegas, and it's in the 60s, and you're going, okay, we're done now.
The desert sand from there.
You're done now. It's all over. No more of these mountain passes where there's snow on the top, and it's just
another
great.
I would call it kind of a country song, but it is by Robert Plant. But 29 Palms. 29 Palms. I feel the heat of your desert heart.
Yeah, love the Robert Plant solo albums after that he did in the 90s. They were great.
And he did an album with Alison Krauss.
Several.
Did a lot of good songs together.
Several with Alison Krauss. It's true. That's true.
You have the memory of associating songs with places where you've been.
Yeah.
You have to remind me of those things, but I remember the words. Where you remember the riff.
I remember the guitar solo, the riffs, and the key changes. She knows the word.
Yeah.
Perfect relationship. Perfect.
Starting in about the 1950s country western.
The only problem with this relationship is that she remembers everything I said. So she said, "That's not what you said 22 years ago." Oh, Jesus, here we go. God, I'm done. I'm done for.
You're done for. You can't change your mind.
But I'm smart enough to say, "You're right, honey. You're always right.
You're always right.
You're always right." I'm always wrong and you're always right.
How about those Steelers?
How about those 3-6 Pittsburgh Steelers?
Thank you.
3-6, moving up the rankings. How about them there, Steelers?
How about those 49ers?
Who do you play next? Cincinnati. In Cincinnati?
We're on to Cincinnati.
In Bengaltown, we're on to Cincinnati. That's right. That's right. Mr. Tomlin, how do you feel about your game? It's on to Cincinnati. Well, what about your quarterback? We're on to Cincinnati.
If I was still working, this is one of the days I have to take off. I have to take off American Thanksgiving.
Oh.
So I can watch football.
Without a doubt.
You know how many times I've seen the Detroit Lions?
And the Dallas Cowboys. And then the Washington Redskins and the Dallas Cowboys.
Yes.
Or the Detroit Lions and the Green Bay Packers. Yes. Or the Cowboys and the Green Bay Packers. Yeah. How many times?
The Pack won
not
yesterday.
Enough, apparently.
The Pack also won yesterday.
The Pack won yesterday. Wow.
Yeah.
And Brady won yesterday. Tom Brady and the Bucks in Munich, they won yesterday.
And we had
old school.
We had what a game.
Buffalo and Minnesota.
What a game.
We had on here what's that thing called that we watch? NFL Prime Time? No, Red Zone?
Yes.
Yeah.
We had the Red Zone.
We had the Red Zone. I love watching the Red Zone because it's just constant.
Yeah.
But first thing goal.
I don't know when that guy pees. It's amazing.
I love that. And so that they were going back to that Buffalo game again and again and again. I was loving that.
Yeah.
I was enjoying that because
there was just so much action.
So much action. Finally, action.
The catch. Yeah. The fumble.
The recovery. The angst. The desire. What a football game this turned out to be.
The ebb and flow.
The ebb and the flow. Where's Howard Cosell when you need him? He would have been great.
All right, I'll let you get back to talking about the market.
Okay.
You tell me what you would like to eat.
Oh, grape jelly.
Well, yeah. I assume. It's Monday. I got the spoon out already.
Got the spoon up, ready to go. Ready to make it happen.
Ready to make it
Giddy on up.
Okay, well,
yes, please.
Everybody have a good week.
Yeah, I think we're doing fine.
Monday, the start of another exciting week.
Yeah,
the ebb and flow.
The ebb and the flow of the markets today. That's right, Jen.
See you in a bit.
I'll see you in a bit. Fabulous. Fabulous. Brian is saying, Zeta State, there are lots of theories going around the internet. I'm sure some of them are true. I think one of them is the liquidity of GameStop. The illiquidity of also companies growing and offering more and more. Let's see what else is going on here. Dude, Marcus. Yes, we like the stock. Will it go up? Not worried about it. It's a good company. It makes money quarter over quarter. No quick gain here. Coyote, he looked like a toilet. I don't know what that refers to. Everyone was like, hey, you want to go see that singing toilet? Again, I'm not sure what's going on. By the way, are we consolidating on the markets? Most stuff I follow almost unchanged. Let's see. Cactus Pete's, I think, right? Yeah, Cactus Pete. That's the name of the Jackpot Nevada place. I think I've spent maybe 5 nights of my life in Jackpot, Nevada. I think I've slept in Jackpot 5 times. Once coming home, 4 times going down, I think. More often going down than coming back. It's for Canadians heading south. We want to go as far south as possible on the first day getting out of Canada. From the west, where I am in the west. Because from Calgary south, all bets are off what the heck you're going to run into. And through Montana, you don't want to be in Montana in December or January. You do not want to be there. Idaho, you really don't want to be in northern Idaho. You want to be towards southern Idaho or south and further than that. And so if you're coming from British Columbia, like we did when we did Creston, you're coming through Coeur d'Alene, Idaho, and then you're heading, I would normally head to the east and head towards Montana and then head south, straight south, going with the 70, 80 mile an hour speed limit. Just go. And run that car and let's get out of here. Heading all the way down. And Jackpot, Nevada was sort of the objective, not to stop in Boise, Idaho, but leave Boise at sunset if you can. as the day is turning into night, and get yourself the jackpot, which is another hour and a half, 2 hours. And then, from jackpot to Vegas is an 8-hour, 7-hour jaunt. It's a nothing burger. You just finished 12, 14 hours of stress to make it to jackpot. You got a 7-8 hour day to get to Vegas, and no problem, because you now know this is going to be dry. We're not going to run into blizzard unless you're in a blizzard situation, which can happen. If you're going south from Canada to Pocatello, Idaho, or Idaho Springs, you can stop there for the night on the way down, your first night, and then the second night you're making it all the way to Vegas. But you got to get through Salt Lake City. You have to drive through it, and rush hour is rush hour. Hopefully you don't hit it. But coming through the highways of Nevada, where there's very little driving, the only guys who are there all the time are the cops, and you just got to watch your speed and hopefully not have an overzealous officer desperate to write some tickets today. Work your way south to Vegas, and then spend a night or two in Vegas as Canadians. Great. Used to be great. Not great anymore. Used to be. And then from there, for us, the desert, Palm Desert, California, 3.5 hours from Vegas through the desert, not via Bakersfield, or not via Riverside or anything like that. Staff the major highways, go through the desert itself to Palm Desert. Oh, I love that drive. I love that drive. The scenery and everything, great. Yeah, it is one of my favorite memories. But anyway, those were days gone by. What can I say? Jackpot, Nevada. What can I say? I see comments about lions and stuff. Not going there. Let's go. Good morning, Credit Savage of Wall Street. Go Rugman. Coyote, Cindy B, my mom's side family's all from Detroit, so I watched a lot of Lions games growing up. Oh gosh. Oh man. Credit Savage, I am coming to you today from the mean streets of Beverly Hills. Had a wonderful weekend with my wife and kids, and on out to have a delicious breakfast. Want to say hi. Let's make some moolah. Welcome to the show. Let's see what else is going on. Raiders, says Credit Savage. Yeah, I know we suck, but I'm a real fan, Does no one like Green Bay right now? Mr. T, hi, Uncle B. I'm number 168 on the thumbs up, by the way. Thank you, those of you who were able to throw us a thumbs up today. I had forgotten to ask. How is that GameStop 17 February 23 35s have an open interest of 7,500 and have no volume at all since the open today? Can you explain this? Oh, sure. Probably can. It's probably because 7,500 contracts were written by one institutional seller a little while ago, maybe a month ago, a week ago, 6 months ago. And the buyer was another institution. And it was just a one-time, one-off deal. That's probably the only reason that there are 7,500 contracts that were written like that. Now, it's possible that 1,750 contracts were written 7-8 months ago, 10 months ago, and now with a 4-for-1 split, it's 7,500 contracts. But that could have also been the answer. Thank you, Miss Jennifer. Yeah. Bagel. Thank you, ma'am. Go Rugman. Let's see what else is going on here. Sounds like a nice, lovely road trip you had there. Oh, we loved going south. We hated going north. Going south was so much more fun because you're just anticipating what's at the end of the road. You know you're going to be surrounded by palm trees, green grass, mountains that are not necessarily snow-covered, only the very tall ones, swimming pools, movie stars, the Beverly Hillbillies. Yes, you know, Palm Desert, Palm Springs, Rancho Mirage. Nice, wide residential streets. Oh, clean, and you just know what's there. You just know what's coming. Can't wait to go. Gary, I love road trips. I haven't taken one in so long, though. Not really in my mind the way gas prices are. Coyote, we just got to make you so rich from writing call options that you won't even mind anymore. There you go. Cheers, everybody. Bagel time in America, in Canada. We're up 33 points on the Dow, maybe 58 now. We're down 2 points in S&P, down 58 on NASDAQ. Welcome, welcome, welcome. Oil down 91 cents a barrel. Oh, yeah. Giddy up. Thank you, everybody, for being here. So rich that gas prices become irrelevant. Yes. The bagels are here, baby. Bagel time. Bagel time. Tesla 190.25 down 572. Apple down 150. GameStop up 54 cents. SoFi down 6. HPQ down 14 right now. Welcome one, welcome all. Oh my, I love this. Options Nomads. Hello from Paris. This isn't Paris, Ontario. This is Paris, France. Welcome, you guys. So glad you could join us today. I'm guessing it's about 4 in the afternoon your time, something like that. I think you're 8 hours ahead of me. Or am I out? No, I think you're 6 hours ahead of New York. I think so. Welcome. Isn't it nice to have the markets open around, 2 something? Brian, I go to the best one is I want to have enough money that I don't care about the beef jerky prices. It's the ultimate truth, Coyote. That's a new level of wealth I had not considered before. Beef jerky is like nothing burger. Swear so rich that you will make road trips as well through Europe while I travel through North America. There you go. Life is good here. Finishing up a bit of school with the kid. Then we jump in our golf cart and off to practice. Then a 10 o'clock tee off time. Life is good in Rancho Mirage, California. You gotta love this. Credit Savage of Wall Street. Coyote, you don't need to become rich. Just make enough a year so you can go on an overpriced hotel, drink overpriced champagne, eat overvalued food, tip everybody $10 for anything and not care. Now that's called making money. There you go. Yeah, baby. Guy, I want to be so rich that no server ever even dares to think to ask me if it's okay that that guac costs extra. What, guacamole? I don't even know what this means. I want him just to know from looking at me, it doesn't matter. I don't care. Nick DQ, did you get out of Tesla? Now, Spur, he's totally right with 4 a.m. 4 p.m., I think. Fortunately, there'll be a lot of special smell in the air over Amsterdam in some minutes. 4 o'clock in the afternoon, 5 in the afternoon. Amsterdam's air quality shifts into a more of a herbal kind of a way. Yeah, end of the workday in Amsterdam. Time to chillax. I can understand that. 4 p.m. Yeah, 4 p.m. Option Nomads. Yes, it's 4 o'clock here in Paris. We just had an afternoon coffee. In a little bit, I'll get a glass of wine and watch the market. We could get used to this. There you go. And try it in do that in Zermatt, Switzerland. It's pretty nice. It's really nice. Paris is okay. Paris is fine. What a coincidence. I just had a coffee right here in my office. How about that? Alberto says, I'm sitting on 200s for December 16 on Teslas right now. Giddy up, buddy. Nice going. bagel is so good. The Dow is trying to go higher. It's at 99 points. Nasdaq still down 54. GameStop 26.66 up 56 cents. That's it. SoFi down 6. HBQ down 7 cents. Amazon down 2.29. Home Depot down $1. There you go. Pfizer's up $1.29. Okay. It wants to go higher. I know people that will write 50s. I know people. Uncle Bruce. Craig Savage of Wall Street. We went to the Waldorf Astoria Steakhouse last evening. We had a great time. We had 6 servers. Everyone treated my kids like royalty, although they were being a pain. A new level indeed. Laugh out loud. 6 servers. Now you're talking. Alex, Option Nomads, welcome to the party, pals. Welcome to Europe. Splair, wait a minute. You're thinking about wine now in your office, Coyote? Splair, and enjoy the relaxed times options. Nomads, hopefully you catch a good French wine. Coyote, Meta, really strong, I guess. Refuses to back off. Is that a state? Friday, we went to Bryan Adams' concert. He played for 2 hours with no opening act. And at the end, he introduced his 94-year young mom and dedicated a song. He's from BC. I use GameStop cash to pay for the tickets. Giddy up. There you go. Brian, something I find neat is when I sell a covered call in US dollars and it always comes into my account as Canadian. $1 Canadian is about $3 US. So I think I should go and buy some beef jerky. It's not worth that much, but okay. When the bill arrived, I told my wife we should dine and dash. This is the Waldorf Astoria Steakhouse. But, you know, the kids. She told me she sold some GameStop covered calls and made a few dollars. So we paid the bill and we drank some more champagne. Mm-hmm. Alberto, we need the rug man here. Coyote, rug man, save us. Brian said, yes, this is awesome. I saw him, Bryan Adams, last week in Calgary. He puts on the best show ever. You can tell he loves what he does. So many great songs and amazing voice. What a showman. Bobby Atkinson, 126 Canadian is about $1 US. Depends on where you get your exchange rate. Yeah, I know it. It's about 25, 30% difference. Yeah. Oh, boy. Jen and I keep a very close eye on the exchange rate. Because with her operation coming up, you know, we're going to be paying in US dollars for that surgery. So we're watching it. As Alex said, I freaking love Bryan Adams. I bought Waking Up the Neighbors on cassette with my pocket money a long, long time ago. Zeta State Bryant, my feeling exactly. There you go. He's incredibly popular in Europe as well. He does a lot of European gigs. He and Tina Turner are incredibly popular in Europe. Is Tina still working? I'm not sure if Tina bothers anymore. She used to live in Switzerland. I'm not sure. She's getting up there. God bless Tina. Nick, the Waldorf is the same hotel chain where Eddie Murphy's Coming to America was filmed. Didn't they also film Eddie Murphy and Beverly Hills Cop in the Waldorf in LA? And a number of other movies have been shot there. Quite a number. The Credit Savage of Wall Street, Uncle Seriously, thank you so much for all you've taught us. We took a few trips like this before, but always watched how we spent. And this trip, we made it a case not to care. It's all because of you. Way to go, guys. Getting some reward. That's nice. I love it. Spirit credit. That's the spirit. Coyote, I grew up a big fan of the Strokes, and Bryan Adams would hang out with them a lot in the early 2000s. Now they have beef with each other. Zed, Tina Turner, she's 81 now. Yeah, she's getting up there. Zach, Credit Savage, I don't fall for the banana in the tailpipe thing. Don't fall for that. It doesn't work. Nick, my favorite summer of '69, Run to You by Bryan Adams. Alberto, damn it, since the rug man isn't present, I will join you. Bagel time. Well, we'll make it work. Where are we at now? We're up 20 points on the Dow, giving it all back. Down a half a point on S&P, NASDAQ down 60. Tesla down $7, 188. Apple unchanged. GameStop 26.98. At the moment, we've got some movement going on here. 26.65. I don't know what to believe. It looks like 26.65. Jumping about. Oot and a boot. SoFi down 11. HPQ down a quarter. $178 thumbs up. Swing Commander, thank you. Thank you, everybody, for the thumbs ups today. We got 181 of them. We need 19 more to get us to 200. Thanks for help getting us there every day. You guys are awesome. Thank you. Credit Savage Friday, we had dinner. And on our way out, I asked this lady what perfume she was wearing. This was amazing. She said Tom Ford's effing fabulous. He made it, pointing to a guy next to her. Tom Ford, laughing out loud. This guy. I'm wearing his perfume. This right here. Here he is. Nick, Rugman is coming. Alberto, I'm laughing my you know what up. Guacamole is essential for sure. You know you're in a pretty interesting neighborhood when you go. Yeah. Do you like wearing Chanel? Oh yeah, there's the CEO of Chanel right there. Why'd you tell him yourself? Oh, this is a nice neighborhood. Interesting. Oh boy, 26.58 on GameStop. We're up 48 cents. We're closer to the low of the day than the high. Okay. Oh my. These sesame seeds, they're making me work. So good. So good. Oh yeah. One more bite. Oh man. That's the last of the coffee. And now, to the rescue, Rugman has come to the rescue. I was able to buy, for the first time in certainly 2 months, maybe 3 months, I was able to buy cans of caffeine-free Diet Coke. 12 packs. of caffeine-free Diet Coke. That's the first time since probably July or August. I mean, we just got back from Europe, maybe just a few weeks after, and for a while, like just a limited time, they had it. But then we had to go back to the 2-liter bottles because you can't find this stuff in cans. So grab it. Thank you very much. Okay. AJ, Uncle Bruce, good morning. When researching other stocks for covered calls, if you find one with dividends, is that a bonus, or don't factor that in? How do you play it? It's not my number one priority. I will say that, generally speaking, a stock that pays a very good dividend is not going to have a lot of volatility like a stock that doesn't pay a dividend. But to be fair, if you buy something like an IBM, and IBM is giving you a 5% return on your dividend yield, if you can bring in 2% a month in premium money from option premiums, added to that the 5% a year from the dividend, you have a 25% a year return on capital. Now, if you have $100,000 worth of capital working for you, and you're bringing in 25%, that's $25,000 a year. It's $2,000 a month, right? Now, I have viewers who've asked me this question in another kind of way. They'll say to me, I have 100,000 of assets. Should I just buy IBM and write options on that? It's a conservative strategy, writing options anyway, but this is even more conservative because of the nature of the stock in question, because IBM doesn't go up or down $10 every day in price, right? And I'll ask a return question first and say, well, look, what's your status? And if the status is, well, we're retired, we're bringing in Social Security, my wife and I, and we'd like to add a couple thousand a month income, can we do it this way? And I say, yes, you certainly could look into this. This is very doable. You might write 1-month contracts or 6-week contracts at a time instead of weeklies, to not have to worry about every Friday being an issue. That's one way to look at it. Another way, though, someone will say to me, I'm actually 44, and I want to, my wife and I both work, and we've been, steadily working off the credit cards, and we just want to bring in an income, an enhanced income. And if it's possible that both of us, within a year, we could both quit our day jobs, and we could both just carry a part-time gig only from home. We only work 20 hours a week each, and we bring in half the money, if that's the case. And the options takes the other half. That would be appealing to us. That's like the first step of many steps down the highway we'd like to go. But 100,000 bringing in 2,000 a month isn't enough to do it. That's when I say, okay, you've got a couple of choices. But if you want to keep it in IBM, kind of still be doing the IBM thing, the idea of perhaps selling the IBM and using the proceeds from the sale to buy deep in the money call options on IBM. And if it allows you to go from, let's say you have, I don't know how many you've got right now. Well, let's say you got 500 shares, 700 shares, about $100,000 worth of IBM. Can you triple that into call options deep in the money? Can you go to 20 from, say, 700 shares to 20 deep in the money calls? Now you write 20 calls at a time, not 7. Would that be the difference maker for you guys? Could, in effect, you're now writing calls on $300,000 worth of stock versus $100,000 worth of stock, because you've tripled the leverage by using the poor man covered call strategy. Could you do that? If that does it for you, the $300,000 worth of stock that you have an option on out to 2025, can you write now 2021 calls? And would that make the difference for the two of you over the next few months to systematically, okay, the first one to quit the full-time job is the missus because she really hates the job and it's not the big money maker. And we've lined up already a part-time gig for her, and we're going to get that done in the next month and a half. And then after that, it's Dad's turn to make his move. While we've been writing for a month and a half now these calls, now Dad makes the move and says sayonara and turns around and does a part-time gig instead. These are concerns because you walk away now from the 5% dividend. You're not going to get the dividend being a shareholder, just an option holder. But you're an option writer, and because you're tripling the number of options, right? Now, the other side of it is, well, we have $100,000 in IBM. But you know what we're going to do? We're going to sell that, and we're going to buy deep in the money calls on Apple. Now, Apple doesn't pay a dividend either. It's 1%. It's nothing serious. But we're gonna do deep in the money Apple calls because there's a higher premium per contract, much better premiums, and so we want, maybe we can buy 2.5 to 3 times as many Apple in the money calls as stock. If we were to take that cash and buy the shares, we could probably buy 500-600 shares of stock, maybe 700 shares of stock as well. It's a similar price stock. It's 140, 130. If we can go to 20 Apple calls at a time and write 6-week calls, 4-week calls, can we bring in 2,000 every 3 weeks on 20 calls? Well, that would be 4,000 every 3 weeks. That's $5,000-6,000 a month on an average return. There it is. Are we happy with that? Now, if the Apple shares would kindly go to $200 a share in the next year, from the 140 range to the 200 range, our deep in the money calls would go up in value $60 each. We got 20 of those deep in the money calls. They're $6,000 more valuable each 20 times. That's 120 grand in gains on the deep in the money calls that we're writing calls against. We'll roll those over. We'll sell those and now buy up 30 deep in the money calls that are at a higher strike for 2026. And now we'll write 30 at a time. So we gained $120,000 gain on the poor man covered call strategy by buying these here, wrote against them for a year. Stock went up, rolled them into 30 calls. We now write 30 calls every 2 weeks or so, 3 weeks or so, and we're making $2 on those at 6,000 every 3 weeks, 8,000 a month. People aren't working part-time jobs anymore. Perhaps they are. Perhaps they aren't. It's all up to you. As a retiree, just trying to add a couple thousand a month to a very conservative strategy, step 1 might be the one. Step 2 might be, no, we're going to do poor man covered calls on IBM. We want to bring in 4,000 a month on the side. We got our 2,000 each on Social Security. There's 4,000 coming in. Now we have 4,000 more coming in. We got 8,000 coming in. That's 96,000 a year. And it's a conservative strategy. I like this. And you may find that every couple of months, you add another deep in the money call to your portfolio from excess cash to write another call, so that you were writing 20 calls. Now you're writing 21 calls. Then a couple months later, now you're writing 22 at a time. And then a few months later, 23 at a time, to compound income coming in and growing income constant. You've been watching my classes. You've been hanging out here. You understand how this works. You've seen the pitfalls, the highs, the lows, the tears, the laughing, the crying, and all the other frustrations. But you are going, you know what? This is what we're going to do. And this is how we're going to do it. Because in the old days, when we put money away at work all the time, and we threw $50 a week into our savings account at our bank that went into an investment thing, and we were getting 3% a year on our money, 4% a year on our money, that was supposed to be worth enough money for us to retire on when we hit 60, 65. And it's not the case. We're at 52. We know we got 100 grand right now, and there's no way this is going to be $1 million in the next 10 years. There's no way. The market went down 30% in 3 months early this year. There's no way we're going to be worth $1 million. How are we retiring? And all the strategy was to buy high yield dividend paying entities. So 5% yield on $100,000, that's $5,000 a year. That's $100 a week. How am I retiring on that? How's that happening? $100 a week on top of my Social Security isn't enough in an 8% inflationary world. It's just not enough. And so maybe writing call options, enhancing returns now in your early 50s, so that by the time you are 60, you have got $500,000, $750,000, $1 million. And by the time you're 65, you've pushed it to 1.5, 2.5, and you're generating some serious money here. I mean, you got to get it yourself. Forget a money manager. You're not going to attract a top-notch money manager to manage your $100,000. You're going to get some 32-year-old recent college graduate who's going to give you pamphlets on how great these funds are and how they've been designed to handle your risk aversion, blah, blah, blah. And deep in the fine print is the 2+% fees these guys charge off the top, whether they make you money or not. And you're going to get 3, 4, 5% a year, maybe, on $100,000. And you're never going to reach the promised land. They are, because they've got millions of guys like you bringing in 50 to 150,000 a year each, and that's billions and billions of dollars, and you're getting 2% of the action. And when you're managing $100 billion and getting 2%, that's $2 billion a year in revenue. There's bonus money for the top 10% and wages for everybody else. It's all good there. But when it's down to the individual investor, how in the world can they take $100,000 of your money and turn it into $2 million by the time you're 65? You're losing $8,000 a year in buying power now on inflation eating you alive. So even if you were getting a 5% yield on your dividend, you're still losing 3%. Oh, and you got to pay tax on the 5% too. Yeah, there's that. So look, if you're going to pay tax on whatever you make, reduce your income tax by having less income, and increase your net revenue by having capital gains revenue, which is option premium, and make more of this, less of that, and keep more for yourself and compound into your account. There's a few classes you might need to take that I offer on my website. Probably a really good idea to do that. Anyway, there you go. Coyote, the Credit Savage. The girls don't really love me. They love bubbly. They like the smell of my Tom Ford when they lean forward and they hug me. Look at 5-day chart on S Snowflake. It's really dropping big time. Brian, Z Estate. Nice to see we have in common than just GameStop. I've seen Brian Adams 9 times now, and he never disappoints. Coyote, last bite is always the best. Pulse Guitar, come on, Rugman. I'm sure, come on, I'd sure like to get out of my December 16 5s on SoFi. Something about having 13 contracts and the cost basis of 937 makes me a little itchy. Did enjoy upfront premium at the moment, though. We're at 586, down 9 cents on SoFi. 26.28 up 18 cents only on GameStop from what I can see here. It looks like that's all it's doing at the moment. We've got, excuse me, we got the Dow up 43 points right now, and S&P down 4, NASDAQ down 75. Lack of volatility on dividend stocks. I assume that is due to more people preferring to hold. Yeah, they're long-term investors, yes. Rolo 88. I've been practicing my crossing arm strategy. It's getting better, but I need to be patient. There you go. Zed is smiling. Alberto, hardest part is the patience. You got this. Brian, Alberto, most of my contracts die in January, so all I can do is fold my arms. Unless a covered call takes a huge dump and you get more than 50%. Rock, Credit Savage kid wanted to use the restroom last night. He's 4. I took him, and on our way, my son touched all. He touched what? He touched all this tall lady and said, "She's pretty." She smiled and said, "Thanks." She's a Kia Gerber, a model, my wife said. Coyote, Brian, you can also keep eyes on the option chain. Look for opportunities, move up and strike. Alberto, Brian, move up if possible. Alberto, Brian, exactly what Cody just said. Lame Duck, Scent of a Woman, Godfather 3, The Great Gatsby, Out of Towners, Weekend at the Waldorf, our main movies over there. Brian, glad to see you are on the same page. I wouldn't have much dry powder as Christmas shopping, but if I can, I will. Alberto, Lame Duck, I'll see your movies and raise you. Original Caddyshack, Credit Savage. Get it's insane, bro. The place is surreal. My kids were at the pool playing with other kids whose dad stayed on the phone for hours. He's some DC high-powered Democratic strategist. The Dems may win. Mr. Premium, Amy J. AJ, I love writing cover calls on my dividend stocks. I consider it turbocharging the dividends. XOMMO. Okay. Coyote, about 50-50 red-green on overall markets. I think we start to see more profit-taking coming soon. AJ, thanks, Uncle Bruce. We're building for retirement, and this is great information. Coyote, Rug, and wasn't Arkenemy has? I don't know what this means. Let's go. AJ, Mr. Premium, I'm adding to stocks to write cover calls, so this dividend thing is interesting. Nick, your interest is not their interest. They make it sound like it's their interest that they offer. Credit Savage, my wife, Uncle Bruce's wife, ran the numbers. She's a CPA and realized we have not lost money ever since we've been selling covered calls. Whether it's $20, $2,000, 300, it's all positive. Stocks are down, but whatever, we're up. How about that? I love this. Alberto, Moon Rocket Person has come out of his or her cave to crush the rug man, laughing out loud. JR, Uncle Bruce, you usually do your politics rant before the members only, but I would like your take on what might happen if the Dems pull a rabbit out of the hat and win Georgia. That will make no difference now. They've got the Senate already locked up, but if they get Georgia, that would give them 51 to 49, plus the vice president makes it 52. So Joe Manchin is no longer a factor, and neither is that gal in Arizona. She's no longer a factor. If they go negative, the vice president goes positive, and it's a 51-50 vote. And now the Democrats can push through stuff in the Senate that they couldn't before without worrying about what Joe thinks in coal country. Interesting. Cindy, I promised my husband that I could sell options on his IBM. And I would be fine because it's pretty flat. Oh, crap. It has really taken off in the past few weeks. It's true. Coyote, the credit savage of Wall Street. Yep, I noticed this as well in my book. It's always positive at the end of each month. What do we got here? We're up 41 on the Dow. We're down 1 3/4 on S&P. We're down 57 on NASDAQ. That's what's happening at the moment. We're down 21 cents on oil. Nothing much going on there. Tesla 193, Apple 148.27, GameStop 26.52, up 42. SoFi is 5.90 down the nickel. HPQ is off 7 cents. So not a lot happening there. But again, we're not up 1,200 points, are we? No, we're not. We're not continuing on with this issue. There you go. Yep. Credit Savage, Coyote, Bear unit is always in the positive because we're realists and try not to moon on every trade. Slow and steady wins the race. There you go. Coyote, Cindy B, you can roll. It's no problem. DQ, I find it interesting that Rugman, the bringer of red, wears mostly green, and the MRP, the rally bringer, wears mostly red. Coyote, the Credit Savage Wall Street, exactly. We are realists. Splair, all right, just in case, I wish you all a relaxed day. Thank you, my friend. I will be back on this afternoon at 3 Eastern, and then I'll be back on my TWB channel tonight, 7 and 8 o'clock. So I have 3 more live shows to work on, and we'll catch up with you guys at 3 o'clock Eastern today for the final hour of our first day of the week here as we watch this market do what it does and how it does it. Congratulations on all of you who are doing well with your option writing. I'm proud of you. I'm excited for you. Credit Savage, Cindy B, your husband owes you a massage or dinner. You just made him more money. Roll over and watch the stock do what stocks do. Coyote, a Rugman brings green for us, but not the rest of the market. That's right. Rugman is our friend. He's our secret weapon. He's on our coffee cups and everything. It's unbelievable. Oh, yeah, Rocket Man. Way to go. Thank you all so much for your kind words today. Thank you for these thumbs ups. How do we do on thumbs ups? 196, only 4 away from 200 thumbs ups today. You guys are awesome. Thank you so much for helping out with the thumbs up meter today. It is much appreciated. We keep hoping to hit 200 every morning show, and we might just make it. 197 here. Thank you, guys. I love this. DQ is asking me a question here about Moderna. Uncle Bruce, thought for later today. I have January 125s on Moderna. And what do you think I should be doing here? The stock's at 179. Hold, roll, what? Well, you know, you can take a look at maybe March, April, May, June's, and you might be able to move up 5, 10, 15 in strike and still bring in more cash, possibly. If you can always do that, there's nothing wrong with that move. The shares want to back off to 130 in the next month or two after having a little run here. You wouldn't mind if you rolled into 125s, 35s, 40s, you know, and it backed off. On the other hand, if this just wants to keep on going, you're a happy guy, lifting your strike price, bringing in more cash, and that's the secret, bringing in more cash. If you can do that, then great. Like I said, take a look. If you have to go forward another 3-4 months, then you do it. Time, that's a nothing burger for you. A pullback on the stock will bring the contract back, and then you're going to roll the other direction. So don't worry about writing further out. But look at the option chain and see what it gives you. Can you bring in $5 a contract, $10 on a contract? I mean, can you bring in some cash and a strike price, an upped strike price, even if it's 10 or 15 or something like that, $20, you know, look it over, see what it gives you. Otherwise, sit tight, and you know, you've got till January, so let's see what gives. My guess, though, is that the higher the stock is going now, your time premium is shrinking out, and it's being replaced with just book value. That's my biggest guess right now. So if you can get into the 150s, it might be more time value than book value your way. Can you make that work? Obviously, your 125 is worth $54. I mean, you know, the stock is 54 in the money, the contract. All right, so it's worth 54 book. So you know, whatever you pay for it versus what you can get for it, this is the key here. How far forward do you go? If it's not doable right now, it's not doable. Don't worry about it. Let's see what gives. All right, Credit Savage. Okay, folks, going to go and have an overpriced breakfast and drink some very overpriced coffee. Very nice. Credit Savage, you guys have a great day. Splair, enjoy credit. 200 thumbs up. So we did it, says Coyote. Cindy, I just rolled my IBM 2 months, only made about 35 cents, but was able to move up from 135 to 140 for a total of 1091. That's excellent. That's a $500 up move on your contract here. That is excellent. That's a $535 improvement. Nice going. I like this. I do like this. The stock's 144.59. Well done. W. Walters, I am number 207, buddy. You are beyond 200 now. I see 209 thumbs up, so we're sitting here now. You guys are awesome. Thank you for kicking them up there for me here at the very end of the show. Thank you all for bringing us well over that hump number. We needed 200 or more. I love it. Fantastico. Like I say, we're up 50 on the Dow. We're at 193 on Tesla, down $3. Apple down 140. GameStop is at 26.52 at the moment. We'll watch this going forward. I'll see you at 3 this afternoon. Coyote saying hi to Cindy, and DQ. Thanks, Uncle B. Thank you, sir, very much. Everybody, have a great morning. Keep your eye on the markets. Good afternoon in Paris. For those of you in Paris, a very good afternoon and a very good early evening to all of you there. You got to love it. Those of you in Europe, I love that. I love it. Thank you all so much for following me, and we'll catch you shortly. Good job, Cindy. Thanks, and have a great morning, folks. Thank you, Credit Savage. All the best to you and the fam. And we'll see you guys this afternoon, 3 o'clock Eastern, for the final hour of trading today to see how we all we work this all out today and get ready for tomorrow. Thanks, guys. See you all later. Talk to you soon. Bye for now.